Okay, let's get started. All right, thank you everyone for joining. Today, we are honored to be having a webcast with Tara Hushbeck, and the topic is going to be leveraging master data to elevate product cost planning. So, thank you guys all for attending. We're going to get things going. Now, before we get started, if you guys have any questions, just leave them in the chat, and at the end, we'll circle back. Any questions that we may miss will be sent over in a follow-up email. So leave those questions. We're going to be leaving some links below to ERP Fixers, some of the services that we offer as well. So if you guys get a chance, click the link and check it out. Thank you, Tara. Let's get started. So a little bit about us before we get to the topic. We're ERP Fixers, and what we do is we provide you with top quality experts in the core SAP modules. Now, that consists of SAP implementation and support, SAP best practices and assessments, material ledger conversion, enhanced cost component reports, and S4 HANA transactional roadmaps. Those are just a few of the many things that we offer. We work directly with you guys. We are very boutique and intimate in our product and services. So if you have any questions, please feel free to click the links. And again, I'm going to be leaving them in the chat. Without further ado, Tara, thank you so much.
Yeah, thanks, Robbie, for the introduction. So I'll just give a quick introduction to myself. I'm an independent SAP consultant that works with ERP fixers, and I've spent, the first 10 years in my career within SAP as an SAP super user in a few Fortune 100 companies. And within the last couple of years, I've switched over and started focusing or branched out rather as an independent SAP consultant focused within FICO, and then specifically within product costing is my specialty. So I'll go ahead and get started on the topic, and kind of just give you an overview of what we're going to go over. So first, we're going to start with just a really quick introduction to product costing. I'm sure most people, if not everybody on this call, knows what product costing is, but just going to level set there real quick, then move into kind of why do we care about product costing, and then how, before moving into what master data is used in product costing, but then more importantly, what opportunities does master data give us in order to elevate product costing, before wrapping up. And then we'll have a quick question session at the end. Like Robbie said, feel free to put questions that you have throughout in the chat, and we'll cover those at the end after we wrap up. So I'll jump right in here with an introduction to product costing. It's the process of determining, what's the cost to manufacture or to procure your products. And product costing gives you a value for not only your cost of goods sold, but also your inventory as it stays on hand. Typically, your costs are made up of cost components. I have a few here: material, labor, overhead. That said, those are kind of the level one. Everybody has, material, labor, overhead, but you can really, cost components are a powerful thing where you can drill in and see much more detail there: direct labor, direct overhead, variable labor, transportation, lots of different cost components that you can use. But I've just put kind of the three major ones there for our quick level set. Like we said, it's used to value inventory. There's kind of two major ways to evaluate your product cost. We're going to focus mostly on standard today, but you can also use moving average. The price control is what determines kind of if you're using standard or moving average, which is housed in the material master. So I just wanted to lay that out there. We're going to focus mostly on standard costing today, but there is that option to value your inventory at moving average. And so product costing is the valuation of not only material components, your raw materials, your semi-finished, your packaging, but also the activities that you need to use to manufacture different products. So labor hours, machine hours, depreciation, overhead, setup, things like that. Those are just a few examples. But so it's both the material components as well as the activities. And then once you have your standard cost, those standard costs are going to be used by your production and process orders down the line to calculate a planned and target value. So those planned and target values are then going to be used later when you're kind of looking at your standard versus actual. So as you're looking at variances, how did we expect to do from a cost perspective, how much did it cost us to actually produce this material. Your production order and process orders variances are going to be driven by that standard that you set. From a semi-finished and finished goods perspective, your variances, like we said, that are driven by that standard versus actual, are going to be broken into these categories. And I've listed them out here. Resource usage variance, mixed price, output variance, scrap variance, etc. Those are kind of the different categories. I'm not going to go into each one specifically, but SAP puts them into those categories so that you can, it enables you to get a better picture of what your variances are at a high level before kind of drilling in. It kind of tells you a little bit about what that variance might be. And then to go back to the raw material side, your standard price will be compared versus your actual purchase price, and any variances there from a raw material perspective is going to go to your purchase price variance. So as you could see, standards are going to be used in a lot of different downstream instances once they're calculated, which kind of brings me to why do we really care about product cost control and product cost planning? Why is product costing so important? And as everybody knows, there's an increasingly competitive landscape since COVID, but even pre-COVID, with transportation costs, inflation, just more competitive, more people in the just different industries, and a lot more competition out there. So having a accurate product cost is really pivotal to enable businesses to make data-driven decisions that will enable their longevity and enable that they will remain profitable. Because if we kind of drill into that and say, it's pivotal, why? Product costing really has an impact on, first of all, your cost control. So how do you know, without accurate product costing, it's really tough to know, where do you have inefficiencies in your production process? Maybe you have some inefficiencies or some opportunities within your procurement strategies or within your resource utilization. So understanding your product cost can really help you have more cost saving opportunities. And then that visibility to control, if we kind of jump down a few here from a pricing perspective, understanding your costs will help you price your product at a price that's not only competitive, but where you're also being able to make a good profit and a good profit margin, and continue to have that longevity, make money for innovation projects, for all the sorts of things that businesses need to kind of succeed long term. And then the final item on there, the final, I guess, two buckets, you could argue. Definitely somebody in compliance would argue they're the most important ones on the list, but some people might argue otherwise. But just from a straight compliance perspective, certain industries, certain countries require accurate product costing in order to meet those regulatory compliance requirements. And one of those would be your inventory valuation. Obviously, inventory is a key item on your company's balance sheet. So understanding accurately what the inventory on your balance sheet should be valued at is key from a regulatory perspective. So now that we kind of, we understand how important product costing is, I want to kind of lay out a little bit in terms of, how do you maintain, since it's important, what are some of those keys to success, right? How do you continue to have accurate and reliable standards? How do you ensure that you can kind of keep that up long term? So there's 3 items on the list. As you can imagine, we're going to spend most of our time in that second bucket, which is master data and master data management, given the title of the session. But I thought it would be a disservice not to spend a little bit of time on that first and the second one, which is understanding complexities. And then that second one is having reliable processes and data. So I'm going to click into those just real quick before we kind of circle back to the master data point. So 2 of the big keys to success, the first one here is understanding complexities. So product cost planning within SAP provides a lot of flexibility. And your product cost planning process can truly be like as simple or as complex as your business requires. So your product cost planning, setup can include things like allocations, assessments, You can do an activity price calculation within the system. You can have integrated planning. Like, really, there's just a lot of functionality within SAP that allows you to increase the complexity of your product cost planning. But understanding the design, the methodologies, the complexities is really vital to ensuring that you're maintaining that accurate product costing. I was just recently talking with a company, and they were saying that they were struggling because they had set up this great design with lots of complexities for their product cost planning, and the person on the team had actually left the team for a different job, and nobody left kind of understood the product cost planning, and so they were actually delayed enrolling their standards for their new fiscal year because they needed help and guidance and kind of understanding the complexities that had been set up previously, and nobody remaining on the team kind of understood those complexities. So it's just really important that not only one person on the team understands, the person who set it up or who owns this process, but just further people on the team. So you have that backup and that knowledge as you are adding these complexities. And then that second item, kind of this next key to success here, is just reliable processes and data. So product costing relies on a lot of processes and a lot of data that aren't owned by us. We don't control the data, we don't control how it's updated, things like that. It's owned by other teams. But we just need to make sure that there's updating processes that those other teams, planning, purchasing, production, just to name a couple, understand that master, that data, those processes are being used by product costing so that people aren't inadvertently making changes or shifts without consulting product costing, just to make sure everything stays accurate and reliable. So those are just two topics. I felt like it would be a disservice not to at least bring them up. But like I said, we're going to spend most of our time in this master data management section in terms of keys to success to product costing. So I want to start off with, what is master data, right? So back to simple, master data is fundamental business data that stays relatively constant over long periods of time. So some of the examples I have listed there, right? The material master, bills of materials, cost centers, GL accounts, like these are pieces of data in SAP that are core to the transactions in SAP. Most SAP transactions are going to call up this master data time and time again. And like it says, it stays relatively constant. You're hopefully not changing cost centers, GL accounts, material master. Hopefully you're not changing those things on a regular basis like you would a purchase order or etc. So it's kind of consistent data that you're going to use. And so what I've done here is I'm breaking up master data that's utilized by, this is specifically kind of looking at master data utilized by product cost controlling into a few buckets. And I borrowed this from John Jordan's book, which we'll reference later, but I've broken it into three categories. Controlling master data, which is going to look at cost centers, activity types, statistical key figures, cost elements, both primary and secondary. Then next you have the material master, which is, the material master screen. I'm sure everybody's familiar with it. There's, tabs on there for all different groups, procurement, MRP. But from a product cost controlling perspective, there's also there's two costing tabs, costing one and costing two, that are owned by us in product costing. And they house things like special procurement costing, costing indicators, lot size, some scrap indicators. And we'll kind of go through that later. But there is a lot of detail in that material master that can be useful for us. And then finally, logistics and planning master data. This is your bills of materials, your recipes, your production versions, purchase info records. A lot of this information, kind of like to the last point I was talking about, was we don't own a lot of this data. Typically in a business, product costing doesn't own the bill of materials or the routing, similar, obvious, or sometimes that's more of an engineering or a production kind of owned master data, but we do rely on that master data. So there's that whole bucket of kind of logistics and planning master data that we're going to need to use from the product cost controlling side. So now that I've kind of laid out kind of what are the pieces of master data that are utilized by product costing, I'm going to go in and kind of drill into each one of these buckets. I'm going to start at the bottom for no other reason that I thought it made the most sense to start with logistics and planning. Um, so I'm going to start with logistics and planning and just kind of drill in a little bit into some key things that you can kind of use or turn on, um, or kind of dig into, get a little bit more detailed to help elevate your product costing a little bit. Some things that I've seen that are a little bit underutilized, from a product costing perspective. So first on the list, like we said, I'm going to go over logistics master data. So these are things like bills of materials, which the bills of materials is just your list of ingredients. What do you need to make the header material from an ingredient perspective? If you want to use kind of a baking term, an ingredient perspective. Then you have your routing and your recipe. This is going to be like the steps to the recipe. So what activities do you need? Typically, these are assigned to a work center and activity types, which we'll talk about a little bit later. But work centers are going to represent like a step or a machine. So it's basically going to tell you how to make your product, your header material. And then finally, we have a production version. And that production version is going to link the bill of material and the routing together to make sort of a production plan. So it's going to say, I'm going to use bill of material 1 and routing 2, and that's my production plan. And you can have, as you can imagine, you can have more than one production version for a given material. And you can use validity dates and or lot size to kind of control that production version selection from a production perspective. But what I want to kind of drill into a little bit here, and this has been, it's actually something we came across recently with one of my clients, is there's been a change. If you have more than one production version or procurement alternative within your environment, which lots of companies do, right? There's lots of different ways that you can make or procure a single product. So depending on what version of S/4HANA that you're on, or SAP that you're on, excuse me, if you are on a later version of S/4HANA, the logic for how product cost controlling or product costing is going to select which production version to use at the time of the cost estimate has changed. So I wanted to go over this because it seemed like, kind of through conversation with some other consultants, this change kind of flew under the radar a little bit. So I want to walk through this. So historically, or if you're on ECC, the standard logic for 1, 2, and 3, for no matter what system you're on, is the same. So it's going to make a determination in mixed costing. If you haven't made a determination in mixed costing, it's going to go look at costing view 1 on the material master and see if you've put in a production version or a bill of material routing in there. If you haven't, then it's going to go and look at your quantity structure control. If you have that set up, it'll go to that. And if not, number 4 is where this logic has changed. So like I said, historically, or if you're on ECC or earlier versions of S/4HANA, it's going to pick your production version alphanumeric based on production version number and production version, like the naming convention of your production version. If you're on later versions of S/4HANA, it's going to be selected based on latest validity date. And well, let me rephrase that. If depending on, so there's a list of notes, applicable SAP notes here in the corner to kind of help you determine how is your system picking, because SAP changed this logic to be based on latest validity date. Some customers didn't like that, so they've now put out a different note where you can now change it back. So instead of doing latest validity date, it's going to go alphanumeric. But the SAP notes that we're referencing here also does use the word randomly. So I don't use the word randomly there, kind of haphazardly. The SAP note does say randomly in their note logic in one of these notes that's listed. So I just wanted to lay that out. And so my recommendation, and kind of why I want to drill into this, is the recommendation would then be, don't let SAP get to step number 4, right? Don't let it pick randomly. Don't let it pick on validity date unless that works for your business. The best idea is to kind of tell SAP through steps 1, 2, or 3 which one you want it to pick. So I'm going to drill into these options just a little bit to kind of help. What would that look like? How would I tell SAP in either 1 or 2 which one I wanted to pick? So one of the kind of topics that I've seen come up in a lot of conferences and a lot of customer conversations is mixed costing. So I'm going to spend a little time on mixed costing. What is it? How do you set it up? Mixed costing allows businesses to cost each procurement or procurement alternative and use a weighting to return an average unit cost. So this is going to be able to be used like in the last scenario, like we're saying, if you can, there's a single material that you can produce or manufacture in more than one way. This is when that would be applicable to you. And you want to say, I want a kind of an average weighted cost of my product. So I'm going to run through a really quick, super simplified example here using numbers that I could remember. So if you have a finished good that can be produced on line one or line two, the cost to produce finished good on line A is, or line one, sorry, is $5. To produce it on line two is $10. And you produce it on line one 50% of the time, and you produce it on line two 50% of the time. So one of the options is that you can tell SAP, I want you to produce it on production with production version one or production version two. So your standard cost is either going to be $5 or it's going to be $10. And if you don't use mixed costing, that's what you'll have to do. You'll have to pick one and cost it at either that $5 or that $10. Anytime you run that product. So say you cost it on line one, so it's $5. Anytime you run that product on line two, you're going to see an unfavorable variance somewhere around that $5 range, right? Because on line two, it costs $10 to make. So you're going to have an unfavorable variance every time you run it on the line two. And then similarly, if you picked line one and your standard cost was $10, you're going to have a favorable variance every time you run it on line one. So you're kind of going to have that variance depending on which line you run it on. With mixed costing, you can tell SAP, hey, 50% of the time it's going to cost me $5 to run. 50% of the time it's going to cost me $10. So my standard cost should be $7.50 because I'm going to run it 50% each. Now, one note there, like I was saying, you're always going to have a favorable or unfavorable cost, or you'll have a favorable or unfavorable if you run it on the line you didn't choose. In this case, you're always going to have a favorable or unfavorable variance because your standard cost is going to be $7.50. When you run it on line one, it only costs you $5, so you're going to have a $2.50 favorable variance, and then you'll have a $2.50 unfavorable variance when you run it on line two. So that is something to consider as you're doing variance analysis and things like that. That's one of the reasons it's important for the team to understand your methodologies and your complexities, because if you're using mixed costing, understanding that variance does become a little bit more complex, or having that understanding is a little bit more important. And that is one of the, I don't know that I would call it downsides, but one of the arguments against using mixed costing that I've heard from the customer perspective. So now that we looked at like what is mixed costing, just since there's been such an interest in mixed costing, I want to go through really quick, how do you set up mixed costing? Is it a hard, complicated process? Is it pretty simple? And my answer is it's actually pretty simple. So I'm not going to go too far into the quantity structure config. I'm actually not going to go into it at all, but there is a small piece of configuration that needs to be done to set up mixed costing. Super simple, very easy, doesn't take a lot of time, but there is a quick bit of config. Then there's two pieces of master data. It would be setting up procurement alternatives and then setting up mixing ratios. So I'm actually going to go through and show in a system what that looks like to set that up. And then your cost estimates are going to utilize that master data, the config and the master data, but the master data above to kind of determine your mixed cost. So if we're looking in a system, I'm going to go ahead and play this for you. You're going to go into, like I said, the first thing you got to do is set up your procurement alternatives. So you're going to go in and you put in your material, your plant, and you're going to create as many procurement alternatives are necessary. So you're going to say, do I purchase it? Do I produce it? Do I do a stock transfer in this example? Where is it coming from? What's my costing lot size? And then I can give it a changeable name. So you're going to go through and pick, but as you could see in that processing category, there's lots of different options. It doesn't have to just be, I produce it on more than one line. It could be, I produce it, I can purchase it, I can transfer it from another plant. There's that flexibility. So once you've set up, and again, this is going to be a very simple example within SAP, but once you've set up your procurement alternatives and you've saved them, you need to go in and tell SAP via these mixing ratios um, how how often am I going to use each procurement alternative? Because that's what it's going to need to know. How often am I going to purchase it? How often am I going to get an STO? So that's what this screen is really doing. It's going to show you all of your possible procurement alternatives. Again, I kept this easy, so I only have two. But in any case, you could have a bunch of different options, and you can say 50% of the time I get it on a purchase order, 50% of the time I get it on an STO. And then you can use, kind of quantity structure dates to kind of determine, this is relevant as of this date with this mixing ratio. So I'm just kind of showing you this setup here. And then, like I said, SAP, the cost estimate. So if I go into and run, I'm just going to run a cost estimate for this one material so that you can see that the cost estimate is then going to utilize that mixing ratio you set up. So you'll see here, it's going to tell you it's using mixed costing for your cost estimate. And then just like we just set up, 50% of the time it's going to run, or it's going to procure it, 50% of the time it's going to transfer it. So you'll see here, it's doing a average of the two to get you your cost. So that's kind of what mixed costing looks like. It's a pretty simple setup. Like I said, there is that kind of complexity that you have to think about from a variance analysis perspective. If it's something you're going to set up. So now I want to just look at, maybe you say mixed costing is not for us for whatever reason, and you would rather not do number one. So, what does number two look like? So in order to do, number two, I'm just going to kind of move gears into the material master here, into the second bucket of master data that's utilized by product cost controlling. And just take a quick look at the material master. So the material master houses, as you all probably know, a bunch of cross-functional information about a material. There's logistics, there's accounting, there's MRP, there's purchasing, there's warehousing, there's all sorts of stuff. And what we own is the costing tab. So that's what I'm going to focus on and I'm actually going to focus mostly on version and alt bomb control because that relates back to those SAP notes we were talking about. But from a costing lot size perspective, that's a very powerful kind of indicator on the material master as well, especially if you're using like fixed cost for some of your products. Having an accurate costing lot size that's reflective of what your typical costing lot size would be is important. Similarly, if you have some costs that maybe are on the lower side and you're having some rounding issues, looking at your costing lot size can really help you get a more accurate cost from a rounding perspective. So there's lots of different fields, the special procurement type costing field where you can, instead of if you're getting, for example, if you're getting material transferred from a different plant and you want the standard cost from that other plant to transfer to that plant, you can use your special procurement costing field key there. So there's just a lot of indicators. There's a lot of power in the material master within those costing tabs. We don't own a lot of the information in the other tabs, but these costing tabs can be utilized to kind of get us what we need in many cases from a costing perspective. So that final kind of item I wanted to point out was on the costing one tab. So if you weren't going to use mixed costing, but you wanted to kind of satisfy that second bucket on the production version selection criteria, you can use costing one, like we said, of the material master, and you can go in here and you can indicate down here in production version what production version you want costing to use when you run that cost estimate. If your company doesn't use production versions, I've seen where some companies don't use production versions. You can go up here and identify your alt bomb as well as your group, which would relate to your recipe or your routing. So you can go in and identify that. So if SAP doesn't see number one for mixed costing, it's the next thing it's going to do is come here and look at these fields. So like we said, my suggestion would be to don't let it get to number 4. So, use mixed costing, use this field in the material master, use your quantity structure date, kind of use those fields to kind of help SAP cost your product based on what happens most in production, how you want it to cost it. Don't let it get to the randomly selection. So now I'm going to switch gears a little bit, and we're going to take a look at controlling master data. So cost centers, activity types, statistical key figures. This is master data that's owned by controlling. So we're going to take a look, and I'm going to drill in to these two buckets here, which is activity types and statistical key figures. So activity types are going to be used to allocate the cost of an activity to a receiving cost object. It's typically, as the naming convention kind of would say, it's used to describe an activity, and it's going to allow the assignment of cost for that activity. So activity types are assigned to cost centers and work centers. And as we kind of pointed out earlier, work centers are typically like machines or work areas. And just as a note here, you are limited to 6 activity types per work center. There are, different things you can do, but that is a limitation of SAP, which is limited to 6 activity types per work center. And some examples of activity types, labor, direct labor, machine depreciation, overhead, and you can get specific with variable overhead, etc. But like we said, there's just a reminder, there is that limitation of 6 activity types within the work center. And then finally, statistical key figures, which are used to represent business valuation for or business values for allocation of costs. So some examples that I've seen used pretty heavily is headcount and square footage. And I'm going to get into kind of how you could use statistical key figures later, but I just wanted to kind of set the stage of like, what is a statistical key figure? So I'm going to quickly kind of go into, and I'm just going to preface this is, there's just an example of how you could use an activity type to kind of elevate your product costing. But I want to preface this by saying, this kind of topic of activity type and activity prices could be its own session. And I've had sessions on it. So has, Margie Wright gives a great session on it. So there's full sessions that can be allocated to this, but I just wanted to touch on it because it is something that I think is underutilized by a lot of companies. And that is letting SAP calculate your activity type for you. So in order to kind of demonstrate how that's possible, and there's many different ways this is possible. Well, one way this is possible is to focus on, I'm just going to focus on an example. So let's say you have an activity type, which is labor cost, and this labor cost is on a direct cost center. So you have an activity type, call it DLBR, direct labor. And basically you're wanting to move that cost from the cost center to a material. And you can do that in both a plan situation as well as an actual situation. So I've kind of laid out, it's going to go from the cost center to the activity type to the material cost estimate via a recipe and routing. I've very simplified that. And then from the actual perspective, it's going to go from a cost center to an activity type to a process or production order to a material. So at the end of the day, whether it's plan or actual cost, you're trying to move cost from the cost center to a material. And so how do we do that? How do we do that assignment of cost? Well, you're going to need to calculate an activity price in order to do that, which one way to do that, there's multiple ways to do that. Like we said, one way to do that is to calculate in Excel and assign that activity price to the activity type by cost center, period, and year in SAP using KP26. I would say that's a pretty common kind of way of doing it. A lot of people are comfortable in Excel, especially finance people. We love Excel. So that's pretty common, just calculate in Excel. I can control it how I want to. I can, get my calculations how I want to, and then just assign it. So that's pretty common. But similarly, we can also ask SAP to kind of do that calculation that we've been doing in Excel and do it for us, which allows us some visibility into, plan and actual within SAP. It really kind of unlocks some, functionality within SAP if we let SAP calculate that activity price for us. So one way to let SAP calculate that activity price for us is to plan your spend as activity dependent, and then identify your activity type by cost element on your plan spend. And then that would, that gets you your planned spend amount by activity type for your direct cost center. Now, remember, we're on a direct cost center here when we're planning spend activity dependent by activity type on our direct cost center. And then you have the next bucket of activity quantity. Well, so I have as much how much it costs, but how do I know how much activity I expect? Again, you can do that calculation in Excel and assign it to an activity type. Again, very common. But you can also use integrated planning and some other functionality within SAP to calculate that quantity and then in turn that price using the production plan. So there's a lot of functionality within SAP to do that. So that's an example, and I'm going to show you kind of a screenshot of how that might work. But before I get to the screenshot, I just want to kind of show the activity type example from a support cost center, because I think this is kind of where it gets a little bit more gray for some people. So if you had an activity type or cost, let's say support labor costs on an indirect cost center. So just for this example, let's say we're calling it FO8 factory overhead or overhead. How do you get that spend from that indirect cost center again to the material? I'm trying to assign this to the material. So again, we have to do that assignment of cost. So we have to calculate that activity price. You can use Excel if you want, or you can create one option. Again, there's many different options for this, but one option is to create an assessment, which is going to allocate spend from that direct cost center from that indirect cost center to a direct cost center. And then use a splitting structure to then assign, how much of that assessed cost should go to which activity type by cost element, should go to activity type, FOH by cost element. And then again, you're going to determine your quantity just as you could determine your quantity in that first bucket on your direct cost center. Like I said, this gets a little bit more complicated in terms of the assessment. How are you allocating spend from your indirect cost center to your direct cost center? And then like using a splitting structure. So for an example, I want to give an example to kind of make it a little bit more realistic. So if I were to say that I want to use, or I want to create an assessment to allocate spend from my indirect cost center to my direct cost center, one way to do that is to use SKF, statistical key figures, which we talked about earlier. And so, like, as a reminder, the statistical key figures are used to represent business values for allocating costs. So in my last example where I'm talking about, I want to allocate, indirect labor cost from, let's call it a human resources cost center, to my direct cost centers to then be, again, allocated to my material. I could use a headcount statistical key figure. And I could say that I want 100% of my cost that's on my human resources cost center to be allocated to my direct cost centers. So let's say I have 3 direct cost centers, and I'm saying that I want to use headcount, so the number of employees. And I'm going to say for my direct cost center 1, I have 50 employees, and then I have 25 in cost center 2 and 3. So what I can do is use that headcount to say allocate 50% of the cost from my human resources cost center to direct cost center 1, and then 25% would go to 2 and 25% would go to 3. And just as a note, you can allocate when you're allocating indirect to direct, you can post those on the original cost element, or you can create secondary cost elements. So you can kind of see in a cost center report, you can see those costs split out. So you can tell which ones came from that secondary or from that indirect cost center and which ones came from the were originally spent on that cost center. So like I said, it can get kind of confusing. So I just wanted to give a picture of kind of what that would look like. So from a direct cost center spend, so if we think back to when I was talking about direct spend, I'm going to plan my direct spend and I'm going to assign it to an activity type. That's what I've done in this screenshot here. So I'm saying, here's all my spend. And here's the activity type that I'm going to assign it to, that I want this spend in this value column to be assigned to this activity type. And you can see you can assign the same activity type to different accounts, different cost elements. So that's what I'm going to do. I'm going to plan my spend as activity dependent and assign the activity type during my plan that I want to use. So then from the direct, if I'm still looking at this direct cost center, you'll see down here there's spend that's in these secondary cost elements. And these are, as you can see, corporate assessment, corporate assessed overhead, factory overhead, depreciation. And these are the cost centers where this spend is coming from. So that indicates to me that this is spend from an indirect cost center that I have now assessed to my direct cost center so that I can then assign it to a material. So as you can see, there's no activity type assigned here, but I can see that since it's in a secondary cost element, I can see that it's been pulled from that indirect cost center. So then if once I've run my splitting structure, which is going to help, tell SAP, how do I want that spend? What activity type do I want that spend to be assigned to? It's going to then go in and assign that activity type to those amounts. Okay, so now all of my spend here is assigned to an activity type. And then all I have left to do is determine how much, what quantity of that activity do I expect to use to make my production plan. And then do the math, ask SAP to do the math, say, take my total dollars that I plan to spend for FOH divided by my planned FOH activity and give me that activity rate that I'm then going to use in my cost estimates from a calculation standard perspective, and then also from my process order perspective, my actual perspective as I'm doing production throughout the year. Okay, so pretty complex topic. Like I said, it could be a whole session itself. I just wanted to, that's one of the kind of areas where I think there's a lot of master data involved. There's a lot of opportunity for SAP to kind of help you elevate your standards within that space. So I did want to talk about it. But again, very complex kind of topic, trying to squeeze it down into 5 or 10 minutes or so. So if you have questions, totally understand that, but wanted to touch on that. So I'm going to kind of skip through these pretty quickly here just to show kind of like I said, there's a lot of master data that's being used in that activity price calculation. We're using cost elements, including secondary in that last example. We're using activity types, recipes and routing, statistical key figures. There's a lot of opportunity within that master data space within all of product costing, but that activity price calculation example that we just used. So one pro tip that I wanted to say here was ensure that you're using master data groupings when you're in your design. Because if you don't, that maintenance can kind of become unmanageable. There's a lot of maintenance within cost centers, cost elements, kind of your assessment cycles, things like that. So make sure to use cost center groups, cost element groups, all that kind of stuff. So just a pro tip there, use those, help yourself make it a little bit more manageable. And so again, kind of just on that same pro tip topic, make sure that my other kind of pro tip suggestion, the first one's the same. The second one is make sure that there's one source of truth. Make master data, keep the maintenance of that data, make sure it's controlled so that you have one source of the truth. And then, like we talked about earlier, ensure finance as well as cross-functional partners understand how master data is utilized by product cost controlling and the complexities of that design so that people are not inadvertently kind of messing up some of the product costing stuff that we might be doing behind the scenes that they don't get to see or they don't know that they're seeing, I guess, on a daily basis. So on that, I'm going to wrap it up here with just a few quick, key takeaways here. Product cost controlling, hopefully you've learned or hopefully you knew already before you came here, is a vital process to all businesses. And it's really utilized across business units. It's not just for us product costing people who think it's fun. It's, for everybody within the business. An accurate inventory valuation and product costing relies on accurate master data. And then, in order to have that reliable master data, we need to make sure that we're following through with making sure people understand those complexities within your design. And then as make sure they understand the complexities within the design, and then help the business kind of elevate their overall, you know, profitability, or cost controls or things like that to help longevity within the business. And then just a reminder, product cost controlling in SAP can be as simple or as complex as is needed. So, you know, if currently today you're using Excel and uploading it, from the activity price perspective, or you know you have a pretty simple design in your product cost controlling, that there's nothing wrong with having that simple design. But SAP does enable you to kind of increase those complexities as the company is ready for it. So make sure you kind of keep your eye on that as you hear the business wanting to kind of add additional things. Just remember, SAP is capable of helping with those functionalities. So just a cue before we go into quick questions, a few resources I wanted to point out. Like I mentioned, I actually mentioned this book earlier, Product Cost Controlling Within SAP by John Jordan. It's a great book, as well as the S4 HANA Product Cost Controlling Configuration and Master Data. This book is focused on configuration and master data, written by Tom King. Great book. I have them both and reference them often. So would recommend if you're looking for some good resources. So I think we can go to questions, and Robbie, I think I'll pass it back to
Alrighty.
you.
Yep. We had a few come in. So the first one is PCC configuration different for planning strategies like MTO and MTS?
So can you sorry, my dog is like barking upstairs, so it's really hard to hear the questions. I'm gonna
Got
try
it.
my thing. Can you
Yeah.
repeat that?
So is PCC configuration different for planning strategies like for MTO and MTS?
So some of the configuration, I would say it depends. And so there can be some, depending on like some of the configuration that you want to set up, there can be some differences depending on your planning strategy. And that's kind of what I said, where a lot of product cost controlling really it requires a deep understanding of the different planning strategies you're using, the different manufacturing strategies, procurement strategies that you have. So understanding those complexities is really important as you're kind of setting up this both config and master data.
Nice. The next one says, Tara, we discussed how important master data is to product cost controlling. What have you seen as the biggest challenge for companies when trying to maintain master data?
Yeah, the one of the biggest, I think, items on maintaining master data is often, it's kind of twofold. One of them is multiple sources of truth. So I kind of touched on this during my presentation, but I've seen in a lot of customers and companies, there can be multiple sources of truth, and maybe engineering is using one source of bill of materials that's outside of SAP, and then maybe product costing is using SAP master data. You know, maybe planning is using an Excel spreadsheet, and just having multiple sources of truth, and you know which one actually is the truth and what's actually going on out on the production floor is sometimes hard to say. Similarly, when you're trying to maintain multiple sources of truth, one of them is often going to be missed, if not all of them are going to be missed. So if people are referencing different sources of truth, and product costing doesn't have the most updated or the most accurate, you could be inaccurate reflecting your cost, which can be tough when you're looking at those, how critical it is that cost tracking is, how critical it is for the like valuation of your inventory. All those kinds of things are tough to maintain if you have them housed in multiple sources.
Let's see. Awesome. So we had a question just come in that says regarding inventory valuation and the material ledger when you're obligated with S4 HANA. Okay. If a company is using standard costing for inventory valuation, is it
Mhm.
needed to run CKMLCP?
Yeah, so as far as so I on your question in terms of the obligatory material ledger with S4 HANA. So on your move to S4 HANA, you are you do have to activate Material Ledger, but one of the big confusions is you don't actually have to activate actual costing within Material Ledger. So you can activate Material Ledger without actual costing. And in that case, unless you're doing actual costing, you would not run CKMLCP because that's your actual cost run. So CKMLCP is your actual cost run. So if you are implementing Material Ledger, but you're not doing actual costing, you still qualify, you still met the requirements of S4 HANA, but you do not have to run CKMLCP. That said, if you are using standard costing for your inventory valuation, you want to activate actual costing for Material Ledger, you would still calculate your standards as you would normally, or as you do today. And then at the end of the month, you would run CKMLCP, which is going to calculate what your costs actually were. And then depending on your setup, it's going to revalue your inventory with that new cost. But you still will calculate. It's like you kind of have the best of both worlds, if you will. You're still going to have your standard, but then you have more visibility to what your costs actually were. So you still kind of can have those hand in hand.
Nice. So we just had an anonymous question come in, and it says, "We heard with UPA there is no need of KP 26. Is that right? And in that case, how is rate for respective activity type and cost center?" Let me reread that. So in that case, how is rate for respective activity type and cost center being calculated in S4?
That's a great question, and I'm gonna have to take that one and respond via email if that's okay, because I personally actually don't know of the kind of those universal parallel accounting kind of intricacies there. So I'm
Mhm.
not 100% sure on that answer. So I'll have to circle back
No
with
problem.
the team on that one.
Yeah, we will be following up as well with all the Q&A questions, so that'll be included in there.
Perfect. Awesome.
Um, yeah, and to the attendee who just asked, yes, you will all receive a version of the recording of the webcast that we just did, along with the Q&A questions as well. And if you need any more further discussion, I left a link. You can visit our website. You can message Tara. We will be there to answer your questions. We got another one. So, Tara, in your experience, what is the most underutilized piece of master data when it comes to product cost controlling?
Um, I would say in my experience, I mean, I think it can be, different for each company. It can be something as simple as, recently I heard about a company's experience where nobody on the team was aware of the special procurement costing. So they were running, cost runs and trying to make the cost between two plants match, versus being able to kind of use that key in the costing tab one to tell SAP, hey, I don't make this material here. I transfer it from another plant. Just tell me what the cost is at that other plant. They weren't aware of that functionality. And so it can be something as simple as that. It's just kind of, you don't know what you don't know. I would say across the board, probably the most underutilized kind of functionality is around the actual costing, actual price for activity types and activity prices. A lot of people do that in Excel, which is fine. There's nothing wrong with doing that, but there is a lot of opportunity within SAP to kind of help you with better analysis from standard versus actual when you let SAP kind of calculate that for you. So we kind of, I'm not going to say breeze through it because I did spend some time on it, but like I said, it could be its own session. And I did put that in there because we see that a lot where it's utilized in Excel and not within SAP.
Let me see. Okay. Any last minute questions before we wrap things up? Feel free to leave them below. We have one more for the time being, and so that is part of the presentation focused on planning, how increasing the complexity of your plan can benefit PCC. But the challenge we see is that getting our plan into SAP can be time consuming. Are there any ways to make that planning process more efficient?
Yeah, so there's that can be one of the big complexities with, or kind of, I guess, barriers to entry, if you want to call it, for not
Mhm.
wanting to let SAP calculate your activity prices, is kind of the time commitment in terms of getting your planned more complex, and getting that plan within SAP. There aren't or there are ways where you can kind of put in some upload programs. It's not standard functionality, but there are ways where you can do upload programs, so you can do the plan in Excel like you probably normally would, and then upload that into SAP. So there are options there to kind of make that more efficient, for your team, because I know that can be crunch time when you're getting your budgets and stuff into SAP.
Nice. Cool. Well, again, guys, any last final questions? If not, we will go ahead and wrap things up. Oh, yeah. Not seeing too many come through, and we're just about at time. So, thank you everyone for attending. Tara, if you have any final words, again, thank you so much for doing the webcast with us. Again, we're ERP Fixers. If you guys have any questions, please feel free to visit the link that's inside of the chat or see us at erpfixers.com.
Yeah, thanks everybody. Appreciate it. Thanks for having me,
Awesome.
Robbie.
Of course. Thanks so much. Have